I'm not sure how well this one will go over and how interested people will be in this, but we're talking about Toll Brothers. Definitely, I know some of you might own this one. They reported earnings after hours, and we'll take a look at these earnings and see what's going on with it, up to 2.39% after hours. Definitely a company that I've been interested in, obviously with a lot going on in terms of housing market. It's pretty interesting to see. So I'm interested to look at these numbers just for the sake of that, really just knowledge sake. That's the whole point of looking up this stuff, is learning. So Toll Brothers GAAP EPS of 90 cents beats by 21 cents. Nice, that's a solid beat. And revenue of 1.65 million beats by 130 million is a good beat, but down 6.8% year over year. We'll need to note that, so we'll be looking at that, no doubt. Home building deliveries, though, actually saw an increase, 1% increase to 2022 versus a consensus of 1,852. So definitely a big beat in terms of housing deliveries that were expected. Home sales gross margin of 21.9% versus 21% estimated, which is where you see a little bit of that extra GAAP EPS at. That's where you see a little bit more of that profitability, is because that margin, baby. So Toll Brothers sees Q4 deliveries of 2,400 to 2,550 houses, up from 2022 this quarter. Big increase there for sure. We're talking about potentially an extra 500 houses. Could be big. Sees an average price of $815K to $835K. And again, I mentioned this when I talked about Toll Brothers. These are high quality houses, right? So really, no matter what the housing market's doing, Toll Brothers houses they're pricey houses, right? And if you've got the money for a Toll Brother house, you're buying it. It's not like recession's necessarily stopping you from buying from Toll Brothers. They see Q4 adjusted home sales gross margin of 21.5, which would be down compared to this past quarter. Net contracts signed for the quarter were $2.2 billion and 2,800 units versus 1.87 and 2,241 units of a year ago. Nice to see that. This is the highest Q3 ever in both units and dollar sales. That's pretty nice. Backlog at the quarter is $6.09 billion and 7,200 units on backlog versus 5.84 billion and 6,800 previously, so a year ago. So a little bit of growth there in terms of backlog means more people are wanting houses built, which is good to see. It's good to see that. Quarter 3 cancellation rate of 8% versus 6.5 a year ago. And again, I give this to just a sign of the times. So you expect that number to increase just a little bit at least, and it did for them. Average price per unit did decrease quite a bit year over year, I will say that. So I'm interested to see, obviously, housing market was super strong last year. Still super strong right now for the most part, which is crazy to see. But just interesting to look at. EPS of 90 cents beat the consensus, but falls from $1 of a year ago. Not unexpected, an EPS decrease year over year, in my opinion. I certainly do not. I'm not shocked by it, right? So looking deep at these earnings, nation's leading luxury house builder. That's right, baby. Net income of $114.8 million. Not a bad number for sure. I'll look at that balance sheet to see how that stacks up necessarily with that. Definitely we got to look at that. Home sales revenue down 7%. Deliveries up. Net contract homes, though, were up 26%. So, again, that average sale price does add up. You got to mention that, too. Average house price definitely adds up quite a bit there when you're talking about 2,800 units. The backlog was good, as we saw. Nothing too significant other than that. The guidance, we did speak about the guidance. You do like to see that community count growth of at least 10%. So again, communities being the neighborhoods, I guess, would be a better way to look at it if you're thinking about it that way. They're trying to expand into more of those naturally. Not a shocker at all. from the CEO here, we are pleased with the overall performance in our third quarter, including revenues of $1.63 billion. Blah, 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 blah. He also says our third quarter net signed contracts were our highest third quarter ever in both units and dollars. And our contracts per community at 8.5 were the highest third quarter in 15 years. That's going to be huge. The strengths has continued into August. We attribute the surge in demand to the number of factors, including historical low interest rates. That's true. Continued undersupply of homes, and consumers focused more than ever on the importance of the home. I agree. I agree with that, man. I do agree with that. Highlights again. We looked at all these goodies. This is just goodies spread out into more detail, but obviously we talked about all this income, baby. Bing, 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 boom. Other than that, obviously other financial exciting stuff, which we'll look at. Frankly, we're gonna look at our favorite little thing, which is the balance sheet. I like to look at the balance sheet on a company like this because it's pretty exciting. So again, this is some good stuff. Good stuff. Assets on this company. Total assets they're giving me, believe it or not. 9 months comparison. 9 months over itself comparison. $10.5 billion in total assets versus $10.8 billion 9 months ago. So not good to see a shrinking asset number necessarily. Liabilities I'd like to see shrink as well. But this is the dealio here. Liabilities did rise, $5.8 billion versus $5.7 billion. It's not incredible, but overall you did see total stockholder equity fell from $5.1 billion to now $4.7 billion. I think it's just a sign of the times. Obviously, average house price shrinking a little bit. There's fear of obviously what the recession does to a company like Toll Brothers. Does it slow down everything going on? A housing market dip, is that going to hurt Toll Brothers? Typically, it's not necessarily the most incredible pain for them. Don't mind the phone call. Just, don't mind. See? I told you not to mind it. But obviously you can see the big dip was actually not during the financial housing crisis for the stock necessarily in 2009. They saw a big dip from 2006 and from the financial crisis, not necessarily a massive dip. Because, again, as I mentioned, these are houses typically that, regardless of market conditions, these are buyers that are very wealthy and they're paying for their houses. Oh yeah, they're paying for their houses. So again, that's part of it. Stock is, it depends on how you look at it. PE ratio under 15, pretty cheap, right? Market cap of $5.79 billion versus annualized revenue on this company of $5.8 billion. Really closer to $6 billion. You know what that means to me? I don't know. In my opinion, that means this thing it's a little cheaply valued. I think it's a little cheaply valued. And about a 1% dividend rate to throw in that dividend yield. You got to do that. So I think it's a little cheaply valued. Is it one I'm actively trying to add to the portfolio? Not necessarily, but it's one I would. I would have much preferred it, obviously, in the teens, but we weren't so lucky to get that. This thing has climbed up quite a bit since its low, up around 200% since then. Year to date, it is actually in the green, up 14.9, which is kind of where I get my qualms about it. The stock's been rising quite rapidly. Don't necessarily know what the total market conditions look like for this thing, and again, on a 5-year basis, up. But this massive dip here, this is a stock that usually just hovers, around the 35 to 45 range. It just typically does. It has for a long while. So I don't know necessarily if this is the best stock for capital appreciation right now. If you bought it in March, it was, by the way. It would have been one of the better. But I just, I'll be looking on the sidelines for now. If it dips quite a bit, which again, the housing market's going to be taking a hit. It's going to be taking a hit as foreclosures start to rise. You got to be looking at housing for that. So, in my opinion, I think that I'm going to wait a little bit and see how the housing market shakes out. And we'll see how Toll Brothers stock shakes out, because it might be worth purchasing if I can get it in the low 30s, even though that's a very cheap valuation, by the way. But this stock's usually trading pretty cheap valuation. What can I say? I do hope you enjoyed.